Welcome to another edition of Context is King. I'm Eric. Joining me as always, Ash.
How are you?
I'm good. How are you?
Excellent.
So today we're changing things up a little bit. We're actually going to look at an upcoming list that we're going to publish on our core channel, and it's top 10 things you wish you had invested in the 2000s, or since the 2000s. And
Regrets.
Right, exactly. Yeah, I
had a few.
Right. So I want to talk about that, right off the bat. What are your big regrets?
Well, I mean, this is in the context of this video. We're not going to sit around mental masturbation saying, I wish I would have done this or that. But look, I mean, for shits and giggles, there's four that come to mind. Mm-hmm. Google, when it IPO'd.
Who wouldn't?
But the thing is, I was extra stupid in that I was playing the search industry market by owning Ask Jeeves, InfoSpace, and all these other companies that were publicly traded, and ergo, the only way to have exposure to the search industry. When in 2003, Google filed for IPO, the IPO price was 85, and whatever the market cap was, some people were it was expensive, but I was like, this is a market that's growing. For whatever reason, I was busy, didn't get in at the IPO price, and I said, oh, you know what, I'll buy it when there's a dip. It finished at 98 the first day, and the reality is—
Where's it at now?
Oh, it's 1,000, but there's been stock splits. I mean, anyway, I don't even think about it. But the reality with that one is, look, I would have had to unload those shares to fund WatchMojo in the first few years. So it is what it is.
Thank God you didn't.
Second one, Apple. So Apple at the turn of the century, I remember just looking at what it was doing with the iPod and this and that, and I was like, there's something there. But that wasn't when I actually really considered it. When I considered it was when one of our colleagues we're based in Canada, so obviously we get everything later, but when one of our colleagues came back from the States, he showed me the iPhone and I looked at it and I was like, yeah, you know what, this
First generation iPhone?
Yeah, way back. I was like, you know what, this is gonna be radically gonna change the company, and it did. Apple is really the iPhone company now. So that, at the time, was broke funding the company. Yeah. So, that was moot, but.
But let me throw something in. What about, the same could have been said about RIM and BlackBerry. So how could you have known that Apple would succeed and BlackBerry
that's a great question. First of all, this is all a lot of hindsight. I'm trying to be candid and not just be I regret everything, because there's a few that I wouldn't, still to this day, I would never do, and we could expand on that. The difference is Research in Motion was ultimately a B2B enterprise solution, which, while grand and grandiose, the same way that an economy in the US is driven 67% by consumers and 33% by businesses, the iPhone, you could just tell, was going to radically change things in terms of consumer adoption. You could tell that this was going to be something very different, whereas it's also because this was a few months after it was out when you heard that it wasn't a clunker. People were already, and it was still early enough in the game. So the iPhone just seemed like more of a game changer, whereas the BlackBerry was always a very practical utilitarian tool.
But it also had, the encryption, which in today's day and age, with all the privacy issues.
Well, what's really weird now, we're going on a tangent with encryption, but I remember in the late 2000s, there was a company called, oh my God, I forgot. It was a Canadian company, and it was basically, it made you anonymous online. Mm-hmm. I remember I was at this company called Mama, I should know this, I'm sorry, but this shows that this is live. Anyway, this company was betting that in the future, people would want to be anonymous when they surfed. And then look at what happened with social media, where you're basically promoting everything you're eating and doing. So I think encryption is a big deal, but we as consumers have already, despite what's happening right now with Facebook, we've already said that we don't care. Let's not be hypocrites. We give everybody our data, and then we're shocked that this happens. Third company is weird. So Amazon is one of those that you could argue, along with eBay, Yahoo, the first wave, it was always very, I believed in Jeff Bezos' spending today, profit later mantra, but I felt that the street and fickle investors were not. The moment when I kind of said, I want to invest in the stock, and again, didn't because I was busy, probably I was pouring every penny I had in WatchMojo, was when we signed up to AWS, Amazon Web Services. When we did that, I said, you know what? Amazon has the backbone to literally host the internet, and now they say Microsoft might catch up in cloud computing, and many other companies are vying in that space. But when that happened, it was a moment that I said, Amazon has all these it's a tip of the iceberg. I said, Amazon, the business that we view and investors are viewing and valuing it today, is really the tip. They're going to be in all these different things, and you couldn't quantify it. I mean, I didn't think they're going to buy Whole Foods and this and that. But when we signed up to AWS, I said, you know what? We should have been on AWS years ago. We're only going on it now, but there's all these other companies that are going to go on it. And now when you think of all the other businesses at Amazon, so that's the third one on the list. And then lastly, very much reviled these days, but Facebook, after the IPO, I didn't touch it at the IPO because my thinking was Facebook has stayed private for far longer, meaning that a lot of the value creation was created before its IPO. I did initially think, the growth of social media is huge, but this was, I think, before the Instagram purchase, if I'm not mistaken. So I was like, it's true that if on mobile, it's not yet clear if Facebook is going to be a leader. So I was on the sidelines. But after the IPO, when it fell to like $30, I said, you know what, look around you. Everybody's on Facebook. Ultimately, wherever the audience is, the economics follow. And that was the one that I also wanted to get into. But fundamentally, I mean, look, it's all hindsight. If it wasn't for this list, we wouldn't even be talking. I don't sit around going. But I think when you're an entrepreneur, you're so in the trenches that you kind of bet on yourself and you forget to really go out and buy on other stuff.
But what about Facebook right now? Like, I mean, with all the context as kings that we've been talking about Facebook and all the issues, is this a problem for their stock?
I think Facebook, it's not. Look, I think Facebook, the dip actually presents a buying opportunity because most people won't care about even if there's a fine, even if lots of other things. But Facebook is really richly valued now. Like it's a high price to earnings ratio. I think if you're going to make a bet, I still think Google, which I don't own any shares of right now, I think Google still has probably, because I view search as fundamentally more of a utility that you need to use. Facebook, you could argue if you don't use Facebook, your life still goes on. So if you were going to consider Facebook and really could only place a bet on one or the other, I think Google, despite its rich frothiness, so to speak, is a better bet.
Yeah, I wouldn't have even put those two in the same league.
Well, I mean, it's betting on the web and betting on the future of mobile web and all. So, they're more closely related comparables than, say, Apple and Amazon, frankly.
Right. Now, speaking of Amazon, Trump is, he's after Bezos, right? Isn't
I don't know if he's after Bezos more for Washington Post, which he owns, or just because he sees the, the tax and it's like the populist kind of speaking there. But yeah, look, I think if you are Jeff Bezos, if you are Amazon's board, if you're their counsel, you should be a bit concerned. I mean, Trump has already shot down Broadcom trying to buy a US-based company. Again, their name escapes me, sorry. So yeah, Qualcomm. Broadcom was trying to buy Qualcomm. So if you're Bezos, I would be concerned. I don't, however, think that Trump means as much. Like, I don't think he's going to follow through the tough talk with the action because he's just more picking something to put a spotlight on and say, look, I care about the people and small businesses. But it's not good news. And I think right now the stock was down 5% in pre-market as a result.
Okay, what about, also in the news a lot these days is Netflix. How are we feeling about Netflix?
So Netflix, there was a time when the share was like $7 and it was worth less than $1 billion as a market cap that I considered going big into. But I always feared the company's debt exposure. Debt generally is what takes companies down. So for that reason, even though I always felt from a consumer perspective was a very, smart play, doing things well, bear in mind, it's not so much even what a company does, it's how Wall Street and investors perceive it. And personally to me, I just view companies with a certain amount of reliance on debt as ones that I would personally steer clear from. But I understand why as a stock it's done really well because it's leading in the future of television, so to speak.
Let me ask you something that's come up a bit more recently, and it's confusing to me. Is Bitcoin?
Yep.
Is it a bubble? Is it is this a penny stock?
No. So Bitcoin. Okay. There's if you ask me if it's a bubble or not, sure. There was manifestations of bubble behavior, but so were .com stocks 20 years ago. Bubble boy. And then eventually nobody would argue that Amazon is anything but a great business today, right? So I think Bitcoin, there were signs of bubbledom last year, but I think ultimately everything that breaks down intermediaries and is a P2P play, whether it was eBay and Skype and all, and not eBay, Skype, and anything else that's peer-to-peer, I think ultimately there's merit there. So I think the bubble, the air has been probably started to suck out of the bubble, but in 10, 20 years, there is legitimately a need for a P2P decentralized digital currency.
There you have it. Thank you very much for letting us know what you think and some of your regrets. Let us know what you regret having not invested in since the 2000s, and check out our list of the top 10 things that you wish you had invested in since 2000. It's on our core channel. We'll see you next time.